Alright everyone, Cowboy Trades here, welcome back to the channel for a super quick update on Bitcoin. So what on earth is happening? The SEC has just stopped out this most recent Bitcoin rally, trapping the Bitcoin bulls. In the past hour, we've crashed to the downside by 5%. Now, here's the news in the markets, here's what you need to know. This morning, the SEC came out and they basically said that the recent wave of applications for ETFs on Bitcoin filed by large asset managers are inadequate. That basically means that they're not going to be looking to accept any of the current Bitcoin ETFs which have come out. Now, they've outright rejected the Fidelity Spot Bitcoin ETF. So far, that's all the news developments that we've got so far. I'll keep you up to date if they reject any of the other applications such as from BlackRock, etc. Really, this is just the tip of the iceberg right now. If they start rejecting ETFs from people like BlackRock, then yeah, this could definitely crush the most recent rally. Bitcoin's been rallying hard for the past few weeks or so based on the fact that all of these asset managers have been filing for Bitcoin spot ETFs. A lot of people have been speculating that institutional money is going to flow into cryptocurrencies because of this, which of course is why we've seen this 27% rally in the past few weeks or so. We've been keeping you up to date on the channel regarding, the actual inflows that are coming into cryptocurrencies right now. So far, if you come over to institutional wallets, smart money and institutional money isn't actually flowing in the markets. The reason why Bitcoin upped in price is because of these smaller wallets. Really, retail wallets are buying right now, and they're buying based on the hypothesis that if they buy now, institutions will FOMO in at higher price targets than they've bought at. Now, as we know, retail don't normally get things right in these markets. If you thought institutions were going to let you buy for cheaper than them, then think again. If retail misses the boat, it doesn't mean anything for them. If institutions miss the boat, well, you can bet that they're going to come out with some news. They're going to get their buddies at the SEC to create some articles or reject some ETF applications in which they can enter back at these cheaper prices. So this is absolutely textbook, ladies and gentlemen. No institutional money is flowing into Bitcoin right now. The ETFs have just been filed as inadequate, and now, based on the fact that we've rallied 27% in the past few weeks, based on the speculations that these ETFs are going to get accepted, now they're starting to get rejected. I do think we're getting ready for a move back down to the downside. Now, we talked yesterday about the fact that Bitcoin will trap those who don't watch this video, and once again, another trap was sprung right into fruition. Yesterday, we were round about here at 31,000-ish when I was making this video, maybe a tiny bit lower, 30,700, something like this, but nonetheless, we were just completing this SFP pattern, and we were letting you know that in the immediate short term, we were going to move down to the bottom of the asymmetrical triangle at 30,200. Now, we did that. We did see another rally back up to the upside, though. You can see this developed into another SFP swing failure pattern. We've obviously been talking about on the channel how looking at this 31,000 yearly high right here, we had a macro SFP above this level. Ever since then, it's been swing failure patterns. We had a swing failure pattern, failed move equal to fast move in the opposite direction here, SFP, failed move, fast move in the opposite direction. And this morning, we tried to break out, and this was slapped down by the SEC. This was once again another trap, just like we warned you of yesterday. So hopefully you watched yesterday's video. Regardless of the news, this was baked in the charts with this retest of the neckline of this head and shoulders, and now it looks like we're heading down to the price target we highlighted in the immediate short term at 29,000. That's the breakdown target of this head and shoulders. Regarding the breakdown target of this asymmetrical triangle, because looking at this right now, this is a very, very clear rejection. Previously, we had some very quick wicks to the downside, which were bought back up. We had a wick to the upside, which was pushed back down. Over here, we had a wick to the upside, very, very quickly pushed back down. We tried to rally, we made a lower high. And like I said, within the past hour, we've got an absolutely nasty bearish engulfing candle tearing through the 4-hour EMA ribbons, tearing through the bottom of the asymmetrical triangle. And it looks to me like right now on the 1-hour time frame, we're going to be retesting round about this 30,300 level before confirming a breakdown to the downside. So this is what I'm seeing. Really just a quick update for you today. Once again, the price target of the head and shoulders hasn't changed at 29,000. The price target of the asymmetrical triangle, the next leg to the downside from there, is 28,400. And recently on the channel, we also mentioned that the weekly EMA ribbons have fired bullish, and we're expecting a retest of the weekly EMA ribbons down at 26,600. So this would correlate to about an 11 to 12% move from where we are right now. The reason why we talked about this is basically, if you go back in history, every single time the weekly EMA ribbons have flipped bullish, they have indicated the start of a bull run. However, we've always, well, pretty much always seen a retracement down to the weekly EMA ribbons, apart from in this one situation. But nonetheless, we did have a 18% retrace following the bullish flip in June of 2019. So I'm proceeding to believe that we're going to break back down to the weekly EMA ribbons at 26,700. You know my price targets, this is what I'm seeing. Now, in regards to on-chain metrics, we did just quickly discuss that institutional money is not flowing into the market right now. We did discuss that retail wallets are flowing into the market. And once again, I really do want to highlight, this is how the markets work. If you think that retail is going to get things right over institutions, if you think retail is going to watch Bitcoin rally, you know, 30, 40, 50%, and institutions are going to buy for higher prices than retail, then think again, because you don't know how these markets work. Once again, if retail misses the boat, then the rocket will continue going to the upside. If institutions miss the boat, they will pull the boat back to the dock and they will buy for cheaper than retail. They can do this in many different ways. They can create FUD articles, they can speak to their buddies in the governments or the SEC and create FUD articles. It is absolutely textbook, ladies and gentlemen. But this is what I'm seeing right now. I do also want to highlight that Bitcoin active addresses are up about 18% today. Now, this is really not a good sign. If I do overlay Bitcoin to the downside, I really want to highlight this. If you haven't seen the active addresses before, basically I'm going to put a vertical ray over the tops in Bitcoin here, here, and here, and you can see that pretty much the macro tops and sometimes the micro tops do correlate. Like for example over here, this was a pretty big top over here, but you can see this correlated to a top in the price action as well. Pretty much every single time the active addresses go on a huge rally to the upside, this is an indicator that people are sending their cryptocurrencies to exchanges from hardware wallets, and this is often when you see a correction that is due for Bitcoin. So that's all I've got for today, ladies and gentlemen. These are my full thoughts in the lower time frames, but in case you're new to the channel, yesterday we posted a 10-minute video regarding my thoughts on Bitcoin. The day before that, we posted a very in-depth video on Bitcoin, the DXY, the S&P 500. This was a 17-minute long video just 2 days ago. So for today, I'm going to keep it nice, short, and sweet. My thoughts haven't changed from these videos. Today's video is really just to reaffirm my price targets, let you know what I think is developing in the lower time frames, and give you this most recent news update. So for today, my friends, that's all I've got. I will be back over the weekend, so make sure you turn those notifications on. Make sure you follow me over on Twitter at 618_cowboy so you can see these news events that are posted in real time as soon as they happen, and you're not wondering, why are the markets breaking down? If you're wondering why they're breaking down as you're watching this video, make sure you follow me over on Twitter so you'll be privy and you'll be ahead of the markets before these YouTube videos do get posted. So like I said, for today, it's all I've got. If you do enjoy the content, make sure to let me know down below by leaving a like and a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Follow me over on Twitter. It's been your boy Cowboy Trades. I'm out. Peace.